Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 8th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Emil, and we're looking at this wave one over. 1, 2, working on 3, 4, 5, A, B, C type of move. Basically, it's a retracement of the 2007 swing point low of 70.53. 15 years later, as we grinded higher toward our destination one, which at the time we talked about being somewhere between 115 and 120. We made it to 114.72. And now we believe the correction, we already reached the 38.2, but I don't think that's it. We're ready to go blasting off. I did talk about this reversal happening because we were overextended and we needed a little depressurization. Still think we're underway and there's more to come before we push lower, in my humble opinion. But anyway, we're looking at a deeper retracement. I'm thinking more like a 618 to 786. That's the big zone we always look at, 618, 786 zone. And I'm expecting more in the deeper end of that. That's why we're thinking 80. But we shall see. And right now, based on this close, from the COVID low up to the high, that broke the 618. From the 2007 low up to the high, that broke the 38.2% retracement. So why is that important from the COVID low? Well, the rule is if you break the 618, you got a 75% chance you're going to go down, make a new low, and you got the 1448 extension right around 85, and the 1272 extension around 82, and that gets awfully close to where this is sitting. So let's jump over to the charting platform where we can see that prior COVID low, which is over here. And from that high, looks like I took that off the other day, so we'll put it back from the COVID low. Actually, it's further over. I'm sorry. Let me get that and pull this over some more and run that extension. So we're closing below that 618 level. And let me get a 3-day on here, see what that looks like. There's the low, here's the COVID low. So there you have it. We're breaking the 618. We have not taken out the 786. So when we take that out, that sets the tone. We're shooting for that 85, 82 area. And we already closed below, even on a monthly chart. If we go to the monthly and zoom this in, we could see from the COVID low, stretch that out, COVID low up to the high. And let's get sure we're right at that high, right in that ballpark anyway. And we did close below on that monthly candle, right at that 618. So what does that tell us, James? We have a 75% chance because of that close that we're going to grind our way down towards 85 and a 70 plus% chance we're going to go visit 82. And I like those odds, 75%, 70 plus. And where is that awfully close to? Our target zone that we've been talking about for several years now. Ever since we topped in reverse back in 2022, we talked about that, headed down to this target. So far, so good. And once it's over, what are we expecting? The dollar to go breaking out. But when is it finished? Well, with this latest development finally closing below this level, again, sets high probability we're going lower before we're officially done. However, as we go to the current daily chart, we talked about this in great detail last week, and coming in the previous into the following week, in the last week, that we were due for a bounce. I expected this. Why? Well, you go over here to the software and you can see why we expected a bounce. The daily was doing our slingshot palooza lower and lower and lower. And now we got a daily PAI hook, trend momentum cross, and we're bouncing. We also have a weekly that is an oversold territory. So I do expect more upside. Hint, hint, hint. That's part of the problem when you have multiple time frames lining up and you're at a critical support zone. And what is that support zone? Notice what we just showed you in the charting platform. On a monthly chart, guess where we found support? On our Magic Fibo. How about that? So, Emil, when I look at multiple time frames and I see we came down right to the monthly Magic Fibo, and then you go to your wonderful MPA PE5 version 5.0 software, and you go and you look at a weekly oversold. You look at a daily after Slingshot Palooza in that weekly cycle down. This type of behavior is typical. A monthly takes longer to cycle than a weekly takes longer to cycle than a daily. So in that weekly, we got a monthly hook and a cross, and the weekly was cycling down. We expected the daily to continue this cycle down, slingshot palooza, get another little retracement, continue the slingshot palooza. And that was all based on what? This latest weekly cycle down off of that swing point high. So when we got this weekly cycle up, we talked about the weekly cycle, very highly probable going back over and giving a cycle. What did the monthly give us? The monthly gave us the hook and a cross down. Months back, we had the monthly hook, PAI cross. We got the PAI steep slope, trend momentum cross, angle and separation. We got a weekly cycle down, weekly cycle up, monthly hook, monthly cross, slope, angle separation. So this is what this does. When this PAI hooks up and the trend momentum crosses, you got steep slope, angle separation. We got a weekly cycle up there. Then when we had it previously, we had a PAI hook down. We got a trend momentum cross. We did have steep slope. We got some angle and separation. And we got a weekly cycle down, weekly cycle up. But we had talked about this with that retracement. We're expecting a lower high, lower low. So what happened? The monthly, again, slingshotted lower as we're pushing lower. And we've been slingshotting lower and lower and lower. So as this has been pushing lower, the monthly became another hook, cross, slope, angle separation. And most recently, we got the weekly cycle down. Now what? Now we have a monthly down, but we got a weekly oversold and ready to turn up, a daily oversold ready to turn up. So what do I anticipate this monthly to do next? I think it's going to go up and slingshot lower while these continue to push lower. All right, so what do we call this? Painting the PAI Picasso, and what the software should look like. So I'm really not looking for the monthly to go cycling up right now, the trend momentums to cycle up, and this thing just blasts off and we go breaking out. That is the plan, but further into the future. For now, I think we're just getting a temporary bounce, maybe a daily at least cycle. Potentially, if the monthly does start to hook and cross back up, then we'll expect the weekly to cycle just like we had there. And then we're going to look to do the same, sell the rally. So I'm definitely, again, looking for another lower high, lower low. Why is that? Well, the technical picture. By breaking below that 618 retracement zone, even though it's holding up at the Magic Fibo at the moment, it could be, I mean, it's not impossible. It's just a low probability that this is over and we're ready to go breaking out to new highs. That is the plan, but I don't think this to here is the end of the correction. And bleep, that's all, folks. That's it. And we go ripping higher right now. I think it's just more of a depressurization for another push lower. And again, based on the recent COVID low up to the high, breaking this level sets the tone at a 75%. We're going to go visit 85. So let me refocus that again. And a 70 plus, we're going to go to 82, and that's where we think we're headed. So up and until price proves otherwise, I do not see this reversal happening from here where we go breaking new highs. I see this as depressurization, lower high, lower low, continuation of this, because right now we have a 75% chance we're going lower. Then we have this bounce breaking out above this high, that high, and going on the new highs. Well, what would that look like? Well, you can take the swing point high to the current swing point low, and we'd have to go breaking all of these boxes. That's what's on here. And it shows we have to initially break the 618786 zone off of this smaller move, which is this small little box. We break that, then we could potentially keep pushing. So go back to the daily where we can see what this looks like. These smaller boxes is this major resistance level. So even on this smaller scale, we have this recent swing point high to the recent swing point low. So let me do that again. This recent swing point high to the current swing point low. So in order for us to start taking this seriously, we got to start taking out that 618 level, which is right in this zone. And you see this box, 618, 786, from that high to that low. So Emil, I would expect during this pullback, because we got a weekly starting to depressurize, and we have the daily hooking and crossing and pushing higher, is why I warned you last week or so, expect the dollar to bounce. Where's a typical place it would like to go? Well, first off, it'd like to do a 618 type of retracement up here, which puts us right around this 100 zone. So it's a few more points. We're at 97.7, so a couple of points-ish. And we look for this to retrace perhaps toward this first battle zone, which is this former resistance support over here. We broke it temporarily, but it maintained all of this over here with support, minus this little dip, which it did a quick reversal. Back up, it retested it, went higher, came down, bounced, finally broke below, retested lower. So this little battle zone, right around this smaller pink box, and let me take all the red off now and use the big cursor. This was former support. Then as it broke down and retested as resistance, we went on the new lows. So as we rally higher, this is going to be a tough nut to crack, and we got to break above it. Once we do that, then from this high to that low, the bigger pink box represents the 618786. But what if we actually do that? Right? What if we actually do that and we're able to break and close above this, then I highly expect we're going to go test this 101 up to about almost 102. Well, is this the trip we're going to get toward the Magic Fibo and then we fail? This is about as high as I think we'll go. Even if we're able to do that, from this high to that low, we start closing above this 100 area, which is my 618 level, then we have like a 75% chance we're going to go visit the 1448. 70 plus will go up here, and that's just barely above testing that Magic Fibo. So I'm looking for a lower high, lower low, but is it going to stop at 99? Is it going to go up and test the 618, 786 zone? And if we break that, then absolutely we're going to go testing the Magic Fibo. But once we get into that zone, if we can get that high, I would definitely look for another lower high, lower low. Fair enough? So up until the dollar and price proves otherwise, we're expecting, based on the software, again, let's just review, that my monthly is oversold, which is still down. My weekly is oversold and is starting to depressurize. And my daily is oversold, already hooking and crossing toward the upside. So this is why last week, the end of the following week, going into last week, I said, expect the dollar to start to find support, and then we're going to look for a reversal. Now, if this weekly can end up hooking and crossing, we're beginning to see the green is still a little flat, but red starting to hook, blue starting to hook. Now we need is green money flow right there to start to hook. The dark green right there, that lowest line, it hooks. That's the beginning. And we can get this trend momentum where green crosses above the red right there and trend momentum 1. And that would be considered a PAI hook, trend momentum cross. If we get steep slope and we get a little angle and separation, then the daily will make the complete cycle. Well, what if that happens? Look where it runs to. Can't make this stuff up. But it runs right to that resistance level. Right around that 99. My 618, 786 off of that prior move. Doesn't that look like a thing of beauty? Can't make it up. It's spot on. So whether you're looking at it in your MetaTrader platform, well, you would do the same thing. From that high to this low, look where that 618 retracement is. Right around that 99. And it's not quite on the bottom. Let me pull that one more time. There we go. So look where it is. Amen? Right into the cloud area. And if my weekly hooks and cross, what do we know about Ichimoku and the relationship of the MPA PE5 version 5.0? When a weekly hooks and crosses, highest of highest of highest percentage, the daily is going to cycle. We're not there yet, but we're very close. And if it does, and we end up cycling, where are we likely to go? Well, it fits. We're looking for a 618 type of retracement to get a lower high, lower low type of scenario, and this would be a daily cycle up. The beauty of Ichimoku in this relationship is that when a time frame cycles and you're below the cloud, you typically get price to get sucked and pulled into the cloud, which is right at our 618 retracement. Wow. Awesome, isn't it? Perfect. Now, is it possible we could break that and go up higher toward the Magic Fibo? Sure, it's possible. But until price proves otherwise, I think we're going to go testing this zone. And I would expect to see, as this weekly is beginning to depressurize, we're probably going to see a hook and a cross. Right? So this is why I'm expecting more upside, anticipating in advance that we're likely going to get this dollar to push a little bit higher and depressurize further. And once you get a weekly to PAI hook, that's when red, blue, and green hook and turn up. We're working on it. And then we get this trend momentum, this one right here, green above the red. We get a little angle in separation. All we need this to do is hook and cross. And the daily does what? Cycles. Why is that important? Because when a monthly hooks and cross, the weekly cycles, and a weekly takes about 2 to 5 months to cycle. So if I'm an options trader and I'm trading options on stocks, futures, commodity, ETF, whatever I'm trading options on, and I get a weekly hook and a cross, and I know the daily's going to cycle, that takes about 2 to 5 weeks. If I get a monthly to hook and cross, then the weekly takes about 2 to 5 months. So if I'm in that circumstance, then I know, well, how long should I put my options out there? Based on the average, you're looking at multiple months out into the future for a weekly cycle. And for the daily cycle, you're looking at about 6 weeks or so on average. So maybe you go a few months out. Kind of helps you in what type of option should I buy based on if I'm looking for a daily cycle, a weekly cycle, et cetera, et cetera. And what about a monthly cycle? That takes about 2 to 5 years. So that's when I use my leaps on different setups and bullish type moves. So any questions on where we think the dollar's going? Again, looking at the charting platform, I think there's a very good chance we're going to go back and retest that 618 retracement off of the recent swing point high to swing point low. Well, you could do this now, which we're testing as we speak, this recent swing point here to this low. We still got overlapping area. So right around this 98.30 up to the 99, which is from the prior high to low, that sets the next box. So you can see why we have these different tiers and where we're likely to test. Well, even on the most recent high to low, once we clear the 618, look how this stacks upon each other. We clear the 618, we get a candle body above, not a wick, but the body closes above this 98.50 area. Then that sets the tone. We got a 75% chance we go into 99, 70 plus plus we go into 100, and 99.80 and 100. So where does that put us? Right dab into the recent high to the current low, a beautiful 618.786 retracement. Amen? So this is why I'm looking minimum we should go here before we go breaking lower. More likely we're going to go up to this area before we go breaking lower. And if we can take both of these out, then if we take this out, then no question we're going to go testing the Magic Fibo. But that would be the absolute highest. And what would that give us? If that monthly could start to hook and cross and we get a weekly cycle up. So let's go back to the software, go back to this weekly, and where does that put us? Emil, look at this. You use the recent high to low, and I'll do the weekly high up here on that last cycle. And if we do that scenario, it runs into the cloud on the weekly chart. Right? Around that 102 area-ish. 102, 103. From the weekly high to the weekly low, we get a weekly cycle up. That would take the monthly a hook and a cross. But if it gives it to us, then we look for price to do a 618 type of retracement on this area, somewhere between that 103, 104 area, and look at it over here. Where does that put us? We close above this area right there, my 618, which is my basically 99 and change. So if we first off take this out, we're going to go here. And if we close above that, then it opens the door. We could go up here, which would be the weekly cycle. Isn't that interesting? That confluence of events, we can get a weekly to cycle. Well, what is a weekly cycle? Where the PAI goes up there, red, blue, and green goes up into 80 and above. And my trend momentum, at least this red and green one, that's this one right there. we would cycle up, and where would price go? Into the cloud area. Perfect move, but I'm not telling you we're definitely going to get a weekly cycle up. But even if we did like the last time, then a weekly cycle down, I'm looking for a lower high, lower low. Even if we get a weekly cycle up and a weekly cycle down, it should look like this: lower high, lower low. Fair enough? How cool is that? Now, let's look, why is that important? It's important for several reasons. Because where the dollar is going, it tells us where the euro is going. How about that? Where the dollar is going tells us where the euro dollar is headed. When the dollar goes up, euro dollar goes down. And it looks the inverse relationship. Monthly still up, weekly's overbought, starting to turn and flatten out, just like the dollar was in the inverse, down oversold. This one's overbought. And we have a hook and a cross to the downside on the daily. And we talked about this, looking for that correction. So if my dollar can go further, what does that say about the euro dollar? It's going to go further down. So I would not be buying, as I said last week. We can come over here and go to the euro dollar on this chart. As I said last week, I would not be buying the euro dollar at this juncture. I'm looking for a further retracement. Okay. What is an area we're likely to visit? Probably around this 114 area. From the recent low up to the high, the 618 zone is right around that 113, 114 area. So if the dollar goes visiting that 618 retracement on the correction up, then this euro should do the same in inverse, go down toward that 618. What if we break that? Then we're going to go down toward the Magic Fibo. If the dollar rallies all the way to the Magic Fibo, right? Rinse and repeat. If this dollar can rally up to the Magic Fibo, then the euro dollar is going to decline down toward its Magic Fibo. And again, it is sloping upwards. So right now it's 1.1136 down to 1.1092. And it is sloping upwards. So even if we're grinding sideways to lower, up, down, sideways to lower, and we're correcting, this will keep sloping upwards after that big run. What was that big run we won? That was that setup we gave you weeks back, months back even, where we talked about this being the reverse when we're ready to go breaking out. And from the recent high to low, we talked about this weeks, even months in advance. Hey guys, we get a close above 108.50, go long and shoot for 113.60, 115. Nice. I was on tune. And we did what? Went right to it, achieved both those targets. Then we got another correction, and we said if we start closing above this 113 area, we were going to go up and do this next extension, which is what? From this high to that low, we broke the 618, and we said we'd start targeting 116.19, 116.80 basically, and we achieved that target. So that was two beautiful setups, rinse and repeat, rinse and repeat. Well, guess what? I suspect we're going to get another perfect pullback extension relationship. The question is that where do we bottom to give us the new high to low? I'm thinking somewhere around this 114. If we break that, then more down here by the Magic Fibo. But I'm looking for another correction to set up another high low, break the 618, next extension. So what would something like that look like? It's going to end up corresponding to this third target we reached right around at 18-ish, and now we're pulling back. Well, let's do it again. Stretch this out, extend this up, bring this in the perspective, and what if we get the correction we're talking about, Well, we come down about that 114 area, somewhere in this little zone. And then we would look for what? From this high to this low, we go breaking back above the 618, then we'd start targeting 118.90, 119.50, 120. So this is what we're looking for. Further downside, then we're going to buy the dip and start targeting these next targets higher. We're not there. Absolutely, we're going to go lower, in my humble opinion. Why? Well, I base everything on Elliott wave, Fibonacci retracements, extensions, and of course, the software. So just like the euro is overbought, expecting more downside, daily hook, cross, slope, angle separation, the 4 hour is going to cycle. Hint, hint, hint. Well, what's the 4 hour doing? Engage, disengage, engage, disengage. It's working on the cycle. So this is screaming more downside while the 4 hour finishes. Then what? Either the 4 hours is going to stop at that point, bounce, and we could go breaking out potentially, or the 4 hours is going to slingshot lower. And that will be an absolute guarantee if we get this weekly in the coming days as we go into this week, perhaps maybe next week. Emil, James, Ian, Mr. Tucson, Harold, Dan, if we end up getting this baby at a hook and cross, like we did over here, the PAI hook, steep slope, we got the trend momentum, green below the red, got the hook, got the cross, the steep slope, the angle separation, and that would say what? The weekly hook and a cross equals a daily cycle down. And what did we just say if the daily cycle down? Where are we going to go? We're going to get sucked and pulled into the cloud. And guess who's sitting right around that 114 target? Huh. How about that? So you see it with Ichimoku. This is why we said years ago we like Ichimoku. It's a visual aid, and it gives us targets what to shoot for. And notice the Magic Fibo on that daily is sloping upward. So we might get the perfect trifecta where we start coming down around that 114, 113-ish, and we run into the Magic Fibo, and we bounce off of there after a daily cycle down. So I won't say I guarantee this daily is absolutely 100,000% guarantee it's going to cycle all the way down, but it looks like it. We haven't had a daily cycle all the way down in a long time. Since we were oversold here after that bottom, then it's been what? Up, slingshot, 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 slingshot. So it's possible it could continue, but we're overdue for this to come down on the cloud, maybe the Magic Fibo, cycle down, then we start all over with another cycle up. That's a beautiful buy. So what's interesting about the software is we can go into expert advisors, properties, and we can tell this what we want to do simply by going to use trigger long. Yes. I love trigger long. Well, do I want to use a slingshot short? No. Do I want a slingshot long? No. I really don't want to buy a slingshot long here because we've been doing that over and over and over and over and over. It's time for a cycle. And I'm watching the weekly hook and a cross, but the software is so intelligent that it won't enter the trade when I say take a trigger long. That's my input criteria. Tell the AI what I want to do, and that's the expert advisor. And I want it to do is buy a trigger long. Right? So we can go in right now and set this thing and say, I want to go ready to trade mode. And it sits in this mode until when? Till you get your triggers higher. When do you get triggers higher? When you're oversold. You get triggers higher. When you're not, you don't get triggers. See, that was oversold, but this wasn't, so there's no trigger. Interesting. So if this were to cycle down and we get oversold, We're going to get triggers higher, these little triggers there, and we're going to get those. So once that appears on the chart, this will automatically enter your trade. Well, the great news is it could take days, even weeks, and this baby will sit in ready to trade mode, and it goes down, down, down till it gets oversold, till it gets oversold. Then we get a trigger higher, it automatically buys your entry. And based on that entry criteria, I could tell it once it enters, I want to do a 200 pip, 400 pip, 500 pip, take profit 1, 2, 3, whatever I want to do. And that's where you use your extensions. So let's just take into consideration this trade takes days to go down. My daily cycle's down. We get the trigger higher on the software and it buys. Then I want to make sure that I look for take profit 1, somewhere around 1850, a little bit lower than actual target number. It's not an actual line in the sand, it's a zone. Then I would take the next one somewhere around that 1950 area. And then my third take profit would be up here around 120. Amen. So when do we get in? When the software reverses, gives me the trigger long. What happens as we start to depressurize and we're in profit? Well, you got many ways to do it, and the software automatically running will give us that option. And go back to this euro dollar. And why do we think it's going to go much higher? Because the software is stating the dollar is going to pull and retrace, the euro dollar is going to retrace further down. Then we'll look at an opportunity to buy the dip like we've been doing the last several months. But here you go. It is in ready to trade mode, and then it'll be days, could be multiple days later, could be a week later. This baby will sit in ready to trade mode, then it gets engaged. As this cycles down, we get the triggers higher, and that's how we made hundreds and hundreds of pips on this latest bounce, and we're going to do it again for the third time. So what again did that look like? Back a few weeks, even a few months ago, when this bottomed, we talked about going long. When it finally closed above 108.50, we talked about these targets. Then after we had this next correction, and we warned you about the correction, then we got this little retracement. Then we started targeting 116, 117, up to 118, and we got those targets. Now we're looking for a rinse and repeat. And then we're going to target 118.90, 119.50, and 120-ish based on the pullback. All right. So pound dollar, same thing. I don't think this correction is over either. I think we're going to get a further pullback, but then we can rinse and repeat just like we did on the prior high to low. We broke that 618. We gave you this opportunity well in advance, weeks and weeks and weeks. We even talked about buying it down here, shooting for that target, several hundreds of pips. And then when it finally broke that 129.50, what did we say? Buy the dip, shoot for 136, 137 area. And what happened? Bingo, bango, jango. We got both targets hit and cha-ching. And from the recent low up to that high was 1,700 pips. Keep buying the dips in the pound and the euro. Well, how long have I been saying that? I've been saying it since this reversal down here at 101.03 in 2022. I said, let's buy and go long. And we're not expecting the pound to go breaking all-time highs. We're looking for like a 50/618 retracement. And I still think the pound has a long way to go. Yes, we're getting a pullback, but we're looking to buy the dip and a trend continuation. So I expect the monthly to turn over in slingshot. We drew this phenomenon way back when this started to bottom. I said the monthly would cycle up, then it would start slingshotting higher and higher and higher as we grind our way toward that target. And so far from the 103 all the way to 138, that's over 3,500 pips. Not too shabby. and there's still thousands more to go. So, bottom line, we have the dollar, come back over to the monthly. If we get our retracement into the zone we're expecting, then the euro dollar is going to go all the way up to this 135, 146, fine tune 140, 145 area. If the dollar goes down to this 80 zone, then the pound dollar is going to go toward this 157, 170, fine tune 160 to 165 area. And that has not changed since this day right there when we talked about going long. And I said, we're going to stay long till we get up to here. And yes, there's ebb and flows, and they do get retracement. And there's just the bigger picture. All we're looking for from all-time high to this recent low is a retracement into the sweet spot and then another push lower. Big picture. So, what does that say about our Elliott wave? Well, here it is. All we're looking for during this euro dollar move up to 140, 145 is this A wave going up in a B wave. And then when it's done, we should come back down in a C wave, coming back toward these lows and likely even make a new low down here, probably in the 2030s. We're already been in this 3+ years to get here. It might take us another couple or so to get up there. So if it's 2026, 2027, 2028, we'll see when we get up here. Then as we go from then down into maybe 2030s, but that's just the big ABC. And what happens after that's over? We go long again, that scenario. Well, we're staying long till we get there. Then we're going to go short for a long period. Then we're going to go back long. Well, that's probably a decade out at least. By the time we grind up here, come back down, and start looking for opportunities to go long again. Big picture. Now, as a scalper, you use the same software, and you just use lower time frame. So the same scenario when a daily hooks and crosses, the 4 hour is going to cycle as it has over the last multiple days, and you trust the gauges for it to cycle. And again, I don't think this is over. I think it's going to continue to push lower as the dollar pushes a little bit higher in a bounce. This is going to pull back a little further, and then we're going to look for buy this when that daily goes long. Amen. And like I just showed you, you can go to a daily chart, set it where you only want to buy a trigger long, and then you click ready to trade mode, and you're good to go. Leave it alone. And then wait for days, could be a week or two, who knows. But when it's finally oversold, you get your triggers, just like we did last time. You made hundreds and hundreds of pips. We got the pullback, then we did several hundred more pips, and we're looking for the pullback, and we're going to do the same. Amen? All righty. Let's finish up. We got the dollar yen. Expected this would rally some more with the dollar. Be careful, as once the dollar tops and reverses. So if I'm scalping this dollar yen, hint, 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 I think it's going to go higher. As the dollar bounces a little bit more, I think this will go a little higher. But I'm not looking for a breakout. I'm looking for a lower high, lower low. So we talked about potentially going long here. It's the same thing which we talked last week of going long, and we reached the scalping target. Now it's turning into a position trade. And let's go back over to the dollar yen, and we can see why. We expected that bounce. Dollar yen, I know I have it in here. There it is. And why? We have a weekly starting to depressurize. I'll get my weekly. Yep, weekly starting to depressurize. My daily is reversing. So remember last week we said, go ahead and scalp this. We can scalp this and going up. And we still got a little bit more to go. So, yep, take profits. We had a trigger on the 4 hour, we got a trigger on the daily, and it's continuing to grind higher. And what we say the other week? We said from the recent high to low, we want to look for that 618786 retracement at least. And sure enough, bingo, it paid off. This was the target. We're into it. As we talked about the recent high to low, this would be the zone I would expect this scalp to go into minimum. Now, again, I think we're going to go a little bit higher because the dollar is likely to pull and push up a little bit more, pushing this dollar yen a little higher. But what happens after the dollar finishes its rally? I'm expecting another push down. So the same would be on this dollar yen. So I'm not holding long-term dollar yen long. We did that years ago. Made a bold statement. I don't make predictions. Everybody predicts something, but I make statements. I can anticipate, I can expect, I can basically tell you where I think the markets are headed and the forecast. But back here, when this came down and did this retracement, after it bounced and did a little retest, I said that this, as long as it holds that 127 area, would go to 160 before it reversed. So at a highest of highest probability, go long, stay long for years till we get to 160. We went up to about 162. Amen? Awesome, because it was, you stay long that period, you get a little Louisiana lagniappe because it was a carry trade. We had high interest rate, low interest rate. We buy this high, sell the low when you buy dollar yen. And not only do we make thousands of pips up, but we had interest payments daily for several years until we got up there. And even after this correction, we talked about a good 1,000 pip trade going back into that same little zone where we look from the high to the low. It was that 618786 retracement zone. We went a little bit further, but it still made a lot of pips. And then I warned you about the big cycle down. So this is just your typical movement. So again, this is not likely based on this move where we're going breaking out to new highs. No, I don't see it. Plus our Fed's going to start lowering interest rates. That's going to, when you raise rates, what were they doing this period? Raising rates. And a currency raises interest rates, it strengthens their currency. You know, lower interest rate starts to weaken your currency. The yen is risk aversion. When the markets start tanking, which they will, this is going to strengthen this, and they're going to start lowering interest rates along with the market tanking. These two are going to go what? Down. So during this bounce, again, I'm not looking for a breakout. I'm looking for this to make lower highs, lower lows. And our Fed hadn't even made a move yet, but they were all wrong. Tariffs are going to cause people to pay higher prices. Tariffs are going to cause inflation. Tariffs are going to cause all these things, but yet the tariffs only brought in hundreds of billions of dollars and no inflation. We're at a lower inflationary rate than we were before the Biden administration. When he took office and then it went way up, we're back below those levels, and it's all where the analysts put their little models and they don't consider what the tariff money's coming in is going to do, and they don't consider the GP growth. So if we can grow this economy, our GDP can go to 5% or higher, then it's going to start to eat up that debt we owe. So there's a lot of things happening. But needless to say, I digress. But we're going to go over the markets in just a second. But look for a lower high, lower low. So if you're still long that move higher, good. You know, the dollar yen did what it needed to do. The 4-hour cycling, the daily's depressurizing, and my weekly is starting to show signs of a what? PAI hook, trend momentum cross. We're getting to see a little slope and angle separation. So what does a weekly hook and a cross equal, Emil? Everybody knows the answer. A weekly hook and a cross to the upside equals a daily cycling up, and we're not quite finished. Got that little bit to go, and this has got a little bit more to go. That's why I suspect a little bit more action. And then just like the dollar, when it finishes its cycle, I'm looking for this to come back down. So yeah, I do think this will go a little bit more, but I'm not looking for this to go breaking out. So what are we looking to do? Take the profits, then reverse and go short and look for that to come back down. But I want the daily to get overbought. So in this dollar yen trade, if you're still in it scalping, great. We got the trigger right there. On a 4-hour, we got the trigger right there, and which we talked about last week. Let's go long and scalp this thing up because it's going to bounce. There you have it. Now what are we looking to do? I think the daily is going to finish the cycle because my weekly is up. Not the steepest of slope, but it's working on. There's a little angled separation, but that's still a weekly hook and a cross. I like to see green get a little more steep slope, but close enough to where I think this will finish the cycle in the coming days. And this will grunt and grind, maybe a little higher. Then when the daily's overbought, sells back down. So what will we do in this case? You go into your expert advisor, properties, and you set up a potential trade where you put in your stop loss, take profits. But in this time, we're going to do the opposite. I want to use a slingshot long? No. I want to use a slingshot short? No. Do I want to use a trigger short? Yes. Do I want a trigger long? No. So it's simply true and false. So all we're looking for is a trigger short. Any trigger, position, scalper, optimize, any trigger is a good trigger. And we do the same thing. And we say just the trigger short is all we want. Okay. And then we say ready to trade. So what happens? This baby grinds in overbought. This goes in overbought. We get to a position where we're overbought together, and we what? Trigger lower, we go short. Where we're here, oversold, we triggered higher, made some pips. Now we're doing it on this recent pullback, making some pips, and then we're going to sell the rally and make some pips to the downside. All right. All righty. I think that's enough of that. Let's continue. Pound yen. Again, we're in danger zone. Yes, I think this might go a little bit higher. I'm not looking for this to go breaking out, but the big picture long term is I suspect we're going to see more downside. And when the markets start to top and roll, probably end of the year scenario, get the big, huge Elizabeth, I'm coming to join you, honey, then this should strengthen and we should get a massive move lower. And in the long term, short term, probably got a little bit more upside. And here's something interesting I wanted to point out. This is looking at when equities, treasuries, and the dollar have a positive correlation. We're in that right now. So that means when they're in a positive correlation, that means they move in the same direction. So I suspect the seasonality we showed you last week or the week before, that July seasonality, the markets tend to rally. The S&P, the NASDAQ, all of them tend to rally a bit in July. That fits the picture that the dollar is expected to rally some more. So they're supposed to rally, even the treasuries, and you look at SPY, TLT, then you got your TLT here, looking at all these averaged together with the dollar index, and it's in correlation. So as the dollar goes up a little bit more, I expect the stock market to go up some more in July as we're grinding. Just thought that was interesting food for thought. And looking at VIX over the next couple of weeks out to August, not a whole lot. They got a little things in here. We got CPI later next week, a little bit of volatility. Then over here during OPEX, when it expires, got a little bit. FOMC meeting at the end of the month, potentially a little bit. Then we got CPI the next month in August, and then August 18th, probably another OPEX area where we're looking for a little bit of volatility. But over the next few weeks, not a whole lot. So we don't see a whole lot of VIX spikes. The markets tend to just grind higher. So it kind of fits the tune with July grinding higher. And then into August, we start to get some sort of pullback. Will it be CPI? Will it be this in this area? We'll start to look for seasonality and a little bit of a pullback in August. But it's kind of showing not a whole lot on the spectrum. So what does that mean? That means when we look at ES, I think we're going to end up grinding higher. We got a little bit of a pullback, rinse and repeat. Yes, we could do a little bit more of a pullback, but I do think we're going to keep grinding. So what are we targeting? This 63.60. We came close. We went up to a high of 63.33. I don't think that's finished. I think 63.60 is going to come into play. We start breaking that, then we got 65 up here. And is this part of the July grind? I think this little bit of a pullback, we're going to get to 63.60 at least. Maybe then we could have another pullback before we maybe go to 65. But I'm looking at heading toward that blow off top sometime into late fall, end of the year type of move. Short term, go to a 15-minute. This is an opportunity. This looked like a beautiful little move, corrective move. Right here, Mr. Tucson. We got this overlapping correction and a equal and similar move down. So if we look at what that looks like with the 3.2, this is a 15-minute. From that high to this low, this looks like a ABC correction. We went to a little bit of extension on the equal size, a little bit further. That's okay. Now look at it. Why do I think if this holds, what do we want to see? From the recent low up to the recent high, we want to see this 618 zone that we're testing. If that holds, then we could see a bounce and a continuation up towards, just doing my Fibos from the recent high to low, kind of reiterating the 63.45, 63.60 area. So we need this area to hold. This needs to hold as support for us to look at that being a three-wave correction is over. And now this pullback to my 618.786 zone is holding. And if this holds and we start breaking back above the Magic Fibo, then it's game on to start targeting 63.45, 63.60. Right? So when do we get real bullish? When we see this hold and we get a 618 retracement that hold and we start breaking above 6,300. So those of you trading futures, we close above 6,300. You're looking at 45 points, 50-point move. And I know a lot of ES traders, they die and go to heaven on 1 or 2 points. Emil, this is screaming 45, 50 points once we close above 6,300. Amen? So let's see, based on this pullback, if it can hold this zone and we start bouncing, you start to see us take out that little swing point above there, basically above the magic Fibo, right at that 63 area, would be a great opportunity, high probability to shoot for the 63.45, 63.50. When we do what? Get a candle body close above 63. Bingo. Could this go and we get one more push? Yeah, this could give us one more push. If we start closing below 62.50, whoops, that was a crooked line, but we start closing below 62.50, then we're targeting 10 points, 62.40, 62.35, 10 to 15 point down, or we hold, we close above 63, then we got a 45 to 50 point move to the upside. I'm still more bullish than bearish. And look at how we're coming down to test that zone and we're starting to bounce off of it. Also, why are we looking at this? Well, let's go to the software. Always about the software, my friends. If you don't have it, you need to join us and come get it. Otherwise, daily turning over, we get a little bit of a pullback. My weekly is in overbought territory, but it's still up. And my monthly is still up in overbought territory, but I'm still looking for some more upside based on seasonality, based on a monthly up, a weekly up. My daily's turning over. So what are we expecting here? Another slingshot. This is that phenomena where red and/or red and blue race off from green money flow and snap back. Slingshot, looking for another slingshot as we're testing that zone to go bouncing. So why do we think we're getting ready to bounce? You go to the lower time frame. My 1 hour is beginning to reverse and engage, disengage. My 4 hour is in oversold territory. So if we can get this pullback to continue just a little bit more, Mr. Tucson, and this baby gets oversold as a scalper, what would I do? Buy the trigger. When it gets oversold, buy the trigger, buy the trigger, buy the trigger. Amen? So this is where it comes. I can go to a 4 hour, I can go in the trade management system and say, okay, buy it when the 4 hour gets oversold and expect this to go up. So I'm watching this zone. It's kind of holding at the moment. So we're not targeting in it for 10, 15 minutes. But if we start closing below this 62.50 area, then I expect it to go down here to 62.40, 62.35 area, at which point my 4 hour would more than likely be bottoming and reversing. Otherwise, we hold this. Technical picture, we close above 63. That's from the high to the low. You close above the 618, 75% chance you're going up here. So the long of it, I'm looking for it to go up here. The short of it, is this going to hold and that's the end and we chop? I'm not really interested in trading in between there because we're stuck between support and resistance. I want to trade long here. We close below there. I want to go short term. And then when we get oversold again, I'm looking to buy the dip. Amen. The question is this dip over? Might be. Well, you go as a scalper and say, well, why would something like that be bouncing? Well, you go to the lower time frame. They're getting oversold. My 15's oversold. My 5's oversold. We're getting the reversal. My 5 starting to reverse and go up. Engage, disengage. There you have it. So this is why this bounce should give us a few more pips. Question is, are we going to break it? So I like to look at these lower time frames. We've tested the 15 before and failed. We broke below, we tested it, we failed. Now we're probably testing it. Is it going to fail? Well, when do we start to get bullish? Well, we got to break the 15 and look where the 30's sitting. The 30's sitting We're testing that. My 1 hour, we're holding the 1 hour bounce off of there where we bounced here, came back, we're still holding. So I'm still bullish. We're above the Magic Fibo on an hour. We're above the Magic Fibo on a 4 hour once it pops in here, way down there. We're above the Magic Fibo on a daily. So bigger picture, we're still bullish to go higher. Hint, hint, hint. That's what we said when we looked at our July seasonality expects markets to grind higher. Amen? Expects markets to grind higher. So I'm still looking for an opportunity to buy a dip. Is this dip finished? It's potentially finished, right? Just with that little 3-wave correction, that was a thing of beauty. Now we got another retracement to a 618 that's holding so far. So again, what if it breaks and closes below 62.50? I go short for 10 to 15 points, take profits, then look for a bounce and reversal. If not, and this holds and we grind up several more points, we close above 63, then it's market set for a good 45 to 50 point run to the upside. Amen? So again, the long of it, close above 63, that one right there, 63. We go along for 63.45, 63.50-ish. If not, we get this to grind and we close below 62.50. Then I look for it to go down about 10, 15 points. If we get this scenario and we get that 4 hour to get all the way oversold, then we buy the hook. If not, price goes above 6,300. We go along and shoot for 63.45, 63.50. What about the NASDAQ? Kind of in the same boat. It too has the same look and feel. You go to that 15-minute, we got the same type of move, that A, B, C. I got to bring this over this way. We got the same look and feel, A, B, C. We did the same type of move with the 3-point from the high to the low to the lower high. We went right to a similar type of move, went leg down, leg two, light extension. Now you can see on the latest move, we're testing that 618,786 retracement zone from this low to that high. We're testing that zone. So as long as this holds, this is more bullish than bearish. If we start closing below 22.8, then we'll start targeting this 22.750 area, maybe as low as 22.730. Then I'd look to buy that dip. Otherwise, this holds. We start closing the opposite direction. So do the same thing we did. You go from the high to low. We start closing above this zone we've tested already. So we start closing above that zone, that 22.9 area. We do what? We go along and we look for this to go up to 23.146, 23.180, maybe as high as 23.3. So watch this zone. Mr. Tucson, we close below that 22.8. Then we can short it down a couple hundred points. A couple hundred points, 50, what is that? 22.8 down to 22.750, about 50 plus points or so. Look for a new swing point low. We close below this zone, we should go to this target. Then we can look to buy the dip. Otherwise, we hold. We go breaking above that 22.9, right around 23, because of that low extension right there. We close above this swing point, then it's game on to go longer to those targets. Rinse and repeat. So what in between? Chop, chop, chop. We break down, we go there, we go long. We chop, we break that, we go long. So I'm looking to buy the dip. Either we dip further to get in or we break out and hold, we go long. So both July, expecting this to grind higher, and we still got several more weeks for this baby to achieve these targets. IWM is the least bullish of the bunch. We're in the danger zone. I do have a put spread for protection on my portfolio out to September. So maybe it doesn't pay off and expires worthless. But if the markets do give us this, and this one by far is the most bearish, why? Go out to the daily view. We have from the recent high to low, we're right in that 618-786 retracement zone, and it's struggling. So I really never expected this to go breaking out. I'm looking for this to go plummeting, close below 160 before we go breaking all-time highs up here. So before we go to 260, we're going to go below 160. Kind of like I said with the ES, before we break 7,000, we're going to break 4,000. That still holds true. And this is just the epitome of lower high, lower low. And this is just struggling in the danger zone. That's why I'm looking for a push lower. So I do have that put spread just for protection. And if it pays out, we get a nice little thrust lower. Great. Now close it for profit. We get the last end of the year push. And then I do one out further because I still think before we go to 260, we're going to go below 160. And we're already at 220. So that's pretty strong for us to say from there to 260 is only 40 points. And from 220 down below 160 is more like 80 plus points. So that's the plan. But that's what I have for protection on my portfolio. And again, it's insurance. It's like you have house insurance. Just because you pay your house insurance, Emil, does that mean you want your house to burn down? No. Or you want anything bad? You have flood insurance because you're in a flood zone. And does that mean you want the house to flood just so you can take advantage of insurance? No. But if it strikes, then I can make money on that downtick, protecting my portfolio. And then I'm looking for the much bigger correction where we go down to 140, 120 before we're done. But is this the end and we start doing it now, or do we dip and then one more push and then finish? We shall see. But this is not real bullish for massive breakouts right now. We need all of this overlapping, chopping price action is screaming a new lower low. Then we can go bullish. But we got to get this at some point. So pay me now, pay me later. Before we break 260 up here, we're going to break 160 with a target down here to 140, 120 area. Amen? All righty. What about our Nikkei friend? Well, if we can start breaking out above this resistance zone, we've been testing it, testing and testing and testing it. But if we start breaking out, then I think this could push us to all-time highs like we've been doing, but push us out toward that 65, 6,600 level. If we start to see the Nikkei start pushing towards its 44, 45, up toward 50 even thousand, then that should push global liquidity higher, pushing our markets to those targets. So speaking of targets, where do I think ES is going? Like I said, before we break 7,000, we're going to break 4,000. That is not my prediction because I don't predict anything. I let that to the prophets. Everybody predicts. Weatherman, this person, that person. It's my prediction, my prediction. I leave that to the prophets. But my statement and my forecast says before we break 7, we're going to break 4. And I still hold to that. And I'm still looking for that blow off top. And then we get the big push lower. Amen? All righty. So is it end of the year, early next year. That's kind of what we're thinking. So in the short term, watch this on that 15-minute. If it's going to hold the zone and we break above 63, then it's game on, 45, 50 plus points. Ask anybody that trades ES, what you can make on a contract, even the E-minis. That's several dollars if you can buy at 6,300 and above, shooting for 63.45, 63.50. Now, if this doesn't hold and we expect a bigger dip, then this is salivate country, Emil. We come down here, that's salivate country to buy to go up to these targets. And I definitely think we're going to reach these targets, right? It's in the cards. We already had from the high to the low. We closed above the 618, tested the 786, and even after this latest correction, that still says we got a 75% chance we're going up here. Look at the daily. We're well above the Magic Fibo, way down here. And from the recent high to low, we're almost to that 1448. We closed above the 618. We closed above the 786. So on the lower time frame, sets up with the bigger picture on the higher time frame, 63.50 up to 65. Well, we already did the 786, 618 closure. So that's why this 63.60 is the highest probability target. We're going to get there. 75% chance this baby's going to keep grinding, likely through the month of July, and start shooting towards 63.60. Amen? And likely we'll continue to push towards 65. Do we have to get to 6,600 by the end of July? No. We might get up there toward the end of the year, or maybe a little bit higher towards 6,600. But we're definitely going to get to 63.60 target. That's 75% still outstanding. So in the direction of the daily says, this is where we're going. We're not there yet. And on a 15, that's why I'm watching this correction. If we can start closing above 63, then yeah, guess where we're going? 63.60. So there's your targets co-influencing with each other. And if we break above 63 on the lower time frame, it's in the direction of the daily, which is this big line up here, and they're all in confluence of events. So we hold, we break above 63, game on. We don't, and we get this bigger correction here, where this baby closes below 62.50, then we look for the bigger dip. That's why this is salivate country, because we got a 75% chance we're going to 63.60. And if we come down to 62.40 or 62.30 by getting this not to hold and we push lower, then that's why it's salivate country, because now we're talking over 100 points to get up there. I'm not convinced we're going to get it, but if we do, more game on. Otherwise, 63 closed above, screaming 63.60. And I'd target 63.50 or 45, then 63.56, basically 60, same zone. ES from NASDAQ just kind of went through the same target. We're targeting 23.146, 23.8 up to 23.3. And look at the bigger picture. You go out to the daily and you look at the recent high to low, and we do the same type of thing. From that recent correction, high to low, 23.3, screaming. We're going to 23.3. 75% chance we're going there. 70 plus, we're going to 24.1. Where's the blow off top? I think it's going to be upwards of this 24 to 26,000 range. Short term, 15-minute, it holds this zone. If not, we get a deeper correction. Great. Salivate country. Why? Because it's screaming we're going to where? 23.3 already off the daily chart. So any further pullback just sets the tone for a lot more upside. And again, how do we know? Because we've already, from the recent high to low, we're already closed above the 618. We closed above the 786, 1,000 plus points ago. And there's your targets, highest of highest probability. Amen? So keep buying the dips, expecting this NASDAQ to grind higher and higher through the month of July. That does not mean every day within the month is going to be an up day, but any pullback should be bought and look for this to go to 23.3, 24 area. And we break that, then we can start looking for 25. But I think we're going to top somewhere between 24 and 26,000 by the time we're done, and we're looking at end of the year type of scenario. All right. All righty. What about Black Gold Texas Tea, the Beverly Hillbillies? Well, Black Gold Texas Tea is trying to be bullish here, my friends. It's trying. I'm more bullish than bearish, Dan. Here's the short of it. We break down below the $60 range. That's the support zone. We came down and tested, and we're bouncing right now. But if we can close below 60, we're going to 50. If I see today, tomorrow, next week, hey, gold prices, black gold Texas tea, close below $60 a barrel, and I don't mean a wick down there, I mean a candle body, then expect it to go down toward 50. The long of it, we can break back above the Magic Fibo. We can start closing above 75. Then not only we have 80, 82 highest percent, but that opens the door to 90 up to about 105 zone. So what's it going to do? Reason I'm more bullish than bearish is because we're trying to close above the Magic Fibo on a daily, and we're testing and holding. But more importantly is the software. Go to Black Gold Texas Tea and look at the software, and the software is more bullish than bearish. Look at a weekly. Let me move this right now. The weekly's kind of engaging over. It's been engaging and disengaging. So I'm going to paint the Picasso for you. I think this is going to end up more like disengage and go higher and finish the cycle. Why is that? The monthly. Look at the monthly, ladies and gentlemen. What do we have, Emil? We got a PAI hook, red, blue, and green. Nice little slope. We got green above the red. There's not a ton of angling separation yet, but it's still a PAI hook and a trend momentum cross. How beautiful is that? And look at Nugget. Yes, I'll look at Nugget for you, Emil. But looking at this, we got the monthly hook cross. We got angle, nice steep slope. We don't have the angle and separation yet, but I still see this as a PAI hook and a trend momentum cross. And what does it say when a monthly hooks and crosses? The weekly is going to cycle, right? My weekly is going to cycle, and look where the weekly is. It never quite finished. This hasn't gotten up here, and the green, red, and blue made it close, but green did not. So this engage, disengage, engage, disengage. So I expect this to go from a slingshot down to a slingshot up. In the coming weeks, this is going to go higher, that's going to go higher, and we're going to go popping a little bit more. All right. Technical picture. When do I change my mind? We close below 60. I'm going short down to 50. Period. This baby reverses and closes below 60. I go short, write it down to 50. Otherwise, it holds, and the software is more in tune with more upside based on the monthly, based on the weekly engaging and disengaging. I expect the weekly to finish the cycle, which means this should continue to grind, And if we can get this baby to continue to grind, we close above 75, it's over. We're going, in my humble opinion, up toward 90. My first targets above 75 would be this 80 and change, followed by 82, then 87, 90, 95. And what's happening on the bigger picture is this correction is giving us a move from the recent high to the recent low. We're getting a 618 retracement. Everybody feeling me? So that high to that low, we're looking at a 618 retracement. So do we get one more push to then do it, or do we go up from now? I'm definitely more bullish than bearish based on that weekly finishing the cycle and the monthly turning and hooking and crossing. So this is why I'm more bullish than bearish. But I still, even with the software being bullish and bearish, if we close below 60, we're going to 50. That's the technical picture. If we close above 75, we're definitely going up here toward 80, 87, and my target's going to be that 93, 95 area, followed by 100, maybe 101 area. Amen? So the long of it, close above 75, we're going up here. The short of it, we close below 60, we're going down to 50. Then what would I do if we're down at 50? Buy the dip. Big time. Gold. Kind of warned you about gold to be careful that we're still in this corrective action. And I still think it's unfolding exactly as we expected. And that is looking for more downside as we've been chopping and grinding. But we talked about it way over here that gold was going to go down toward the Magic Fibo, just sitting down here, not on the 3-day, but on the daily chart. Let me go to the daily, sitting down here around 3,000. So I still think gold is headed down to somewhere between 3,000 and 2,700. My sweet spot is around 2,800. Amen? And we kind of warned you as this would go down, would rally back from 32 to 3350 area. Then we'd start pushing back down at least toward 3150-ish, if not a bigger push. But I'm looking for this 5-wave to play out to where we end up somewhere around ideally about 2,800. Minimum, we're coming to the Magic Fibo. So any rallies on gold should be sold as we expect more downside. Then once it's over and we're sitting somewhere between 3,000 and 2,700, ideally 2,800 zone, then it's buy, salivate, hold on, and look for gold to go ripping toward 5,000 in the years to come. I'm not saying it's going to go from 3,000, 2,800 zone to 5,000 by the end of the year. No. But as our markets give that, Elizabeth, I'm coming to join you, honey, gold is then going to take another big run. That's the plan. So look for further downside. Again, we do have some more overlapping pricing coming in here, but the momentum is downward, another retrace, downward. Then this is a perfect buying, anywhere between 3,000 and 2,800 or lower. We get to 2,700, that's even a much more better deal. And the next target would be 5,000. And again, where does all that come from? That's just the recent move. If we can take gold in a 3-wave move up here, and let me take some of these off just to show you what it would look like with a fresh one. And I know I got these all over the place. Let me just take some of these off and put one of these on here. And this is Y5000. If I can grab one of those and remove it and clear this up. So we want to take the recent low and do a 3-point tool, a 3-pointer from the low up to the high. To this higher low, in my humble opinion, is going to be somewhere around 2,800 by the time we're done. And then you start looking at your extensions. We're going to the 2618 again. Does that this number sound familiar? 2618? Well, go to a higher time frame on gold and look at the recent pullback from here. That high to low. Those of you that have been with us for many years, GPA Trading Services, celebrating its 15th year. And those of you that were with us way back, we talked about when gold hit 1900 area. I said it would go to 1,000 area before, then it would rip to 3,000. And this was in advance, right, Emil? In advance. We'd come down about 1,000. Well, what was that? 618, 786 retracement. Huh. And then it went where? 2618. So I'm looking for that same type of move. And I know this took years from 2011 down to 2016. That was the correction. Then we started blasting off. Most recently, going vertical. But we took out the 272, 2618 area. But looking at this move I'm looking at now, go back to the daily, do the recent low to the high, 3.2. And when we reverse somewhere in that, 3,000, 2,700, 28, kind of just chose randomly 2850. What is my 2618? 5,000 plus. So this is where I think gold in the coming years is going next, 5,000. A roundabout number, 5,000. Once we get there, we can start targeting 53 area, but that's where I think we're headed. Is it going to be in 26? Maybe. Is it going to be in 27? Maybe. But I'm not looking for this thing to go from 3,000, 2,700 to 5,000 by the end of this year. That's a little quick, especially if our markets continue to grind higher. That helps this grind lower. Then when the markets do the Elizabeth, I'm coming to join you, honey, and the ES, S&P 500 before breaking 7,000 goes down below 4,000. And during that period I call Elizabeth, I'm coming to join you, honey, this baby will start running again. But the plan is to then go from 3,000, 2,700, 28's kind of the sweet spot, to then go ripping toward 5,000. But that's just rinse and repeat of what has already happened, right? That's why I go out to the weekly, show you the bigger picture. We went to that 2618 and above, and I'm looking for another one of these type of moves after the correction, another one of those back toward 5,000. How cool is that? What about silver? Silver still, as gold corrects, I think silver is going to correct and give us a little bit better correction. So I like SLV, and you can buy and hold it in your account, retirement account, whatever. And we talked about this. We can go back here, old school, and go back in here where we talked about silver, and we went out to the monthly. And remember this chart not long ago, Emil? How long we talked about this? That from that low, that 618 retracement, we had a highest of highest probability we were going toward 35. And eventually we're going where? 41. Well, this is old school, which we put it on the chart so long ago, and we reached the targets. Now I think we get a little bit of a correction for us to still continue. 40, we're going up to 50, 60, which is off the chart on this one. Why do we have 50, 60? Well, come over here to SLV and you look at that bigger picture from the high to the low. We've already taken out that critical zone. So we're going up here to 60, 70 is a given. My humble opinion. Absolutely, we're going to 60, 70. No ifs, no buts, no ands, no exception. We are going to this target. Next question is, are we going to get a bigger correction? It's time. We've been vertical for a while. We need another correction. So let me zoom in and look at what we're looking at. This latest high to low, we're stopping at 618. We're testing that zone. I would see extension coming lower. So the plan is when gold gets down to 3,000, 2,700 correction, it comes down toward its magic Fibo. I expect silver to do the same. When gold hits its target to the downside and silver somewhere around this area, then I add to my position there. If it actually goes down to where I have some resting orders at 25 or lower, this is extreme salivate country, right? Extreme salivate country. So if we end up getting gold down to that 3,000, 2,700, and silver is anywhere below the daily magic Fibo, and we're pushing toward 25 or lower where I have those resting orders, good till cancel orders. So if it dips down here, I'm just adding more shares to SLV, and I'm going to hold it until we get where? Minimum 60 to 70. So I got to go out to a higher time frame to show you that target. And in my humble opinion, silver will absolutely, without question, get to 60, 70. What really excites me, if you go back to gold, and we'll do nugget in just a second, you go back to gold and you look at this bigger picture, we already reached the 272, 2618, 272 right there, and 2618, right? See it? Already reached it. Well, look at poor SLV. It's just barely into the retracement zone and it hasn't broken out yet. So look where the 2618 is, 100 plus. So now, if silver was just to catch up with gold and make that run toward the 2618, that's why my 60/$70 target, in my humble opinion, is a guarantee will happen. It's conservative. Believe it or not, that's conservative, and we got to more than double to get up there. And that's conservative. That's the plan. With AI, the drones, all the new things, they use a ton of silver. Silver's a finite amount left out there, and we have huge demand. Supply and demand says when your demand is high and supply is low, price goes skyrocketing. That's why it's going much higher. Amen. And I'm not talking about once it gets down here, it's going to be at 60 to 70 by next week, next month. No, but it will reach it. Into 2026, maybe. Into 27, more likely. But 26, possibly. And we're almost into 26 now. So by the end of this year, I wouldn't say we have a very highest probability. We're at 60, 70 by the end of 2025. By 26, higher, much higher probability to be there. But that's the toughest part, is it when? Well, when you own shares, it doesn't matter. If I'm buying it at 25 and 2 years later it's at 60, great. Buying at 30, we've been in this for some time, and I'm just adding more and more shares looking for my 60 to 70 target. Let's continue. A request was for Nugget. Let's go over here. We have software available in NinjaTrader. As a reminder, NinjaTrader just did another update. So if you have this, I recommend you update. NUGT for Nugget. There we go, Nugget. And it's part of the same correction email. So as gold corrects, you would expect Nugget to correct. And what do we have here? A little engaged, disengaged slingshot. We already made a new low. That's looking more and more likely we're coming down toward the magic Fibo, right around that $60 range. So what I'd love to see for Nugget is get this daily to cycle down, finish the cycle. Let's check the weekly. See how we're doing on the weekly. Weekly's overbought, almost at a hook and a cross. So yeah, I do think we're going to see gold pull further back in the coming weeks. I think we're going to see Nugget pull back in the coming weeks. And what are we looking for? Part of the software within the MPA 5.0 software, we have under drawing tools, you go to your Fibonacci retracement and extensions. So from this recent low up to the high, we're looking for a 618 type of retracement. As gold, I expect to see that retracement toward the Magic Fibo, but from that recent low to high, this would be a great area for us to come down somewhere around that 60, maybe 52 area before we then bounce to go higher. That's off the weekly chart. Let's see, go to back to the daily. But you got the same extension retracement relationship, and that would be a good area for at least the Magic Fibo. Anything lower than the Magic Fibo puts us into salivate country, especially if we come down in that 618 zone. So then what we would look for, you can compress this, and we look for our extension, and that would be the 3-point tool. So you go back to drawing tools, you go back to Fibonacci extensions, MPA from market price anticipator, and that's part of the software package. So from the recent low to the high to the higher low, which we expect somewhere in this 50 to 618 retracement zone, then look at your extensions. 112, 118, up to 136. So what happens when gold pulls back and starts ripping higher? We're going to get Nugget to do the same. Amen? So how much lower? Same thing. Still looking for that 618 type of retracement in the coming days, weeks. And I'm looking for this to cycle down, finish the cycle, price to start dipping into that support zone, and then we can look for the buy. When do I know when I should buy Nugget? When you join class and we go through the technical picture on gold and we say, yep, gold is doing what we asked it to do. It's giving us this 5-wave down to finish that last bit of a correction, A, B, C type of correction. And when it's over, it starts to set the tone for buy Nugget, buy gold, many ways to play it. Go to Costco and buy gold bars, whatever the case may be. But this is the zone we're looking for. And it's the same recent low to high, 618, 786 zone. So that's why we're looking for that 3,000 down to about 2,700. Any questions on that? So in the short term, Nugget's going to go down with gold. Part of the move, it should go down with gold. And then once gold is finishing up, and more than likely, we're talking at least a few weeks for this to finish all that cycle in discontinuation. Could be a little bit longer, but once it is, and we're in class and we go based on the timing and the side and the overall software and the technical picture, it's time for gold to start bouncing. And we're looking for this to go ripping higher as well. And then you can use your 3-point tool, your extensions, to when I start buying down here in the $60 or lower zone, adding to my position. What am I looking for? A double, at least. And again, this might take a few years by the time we get the correction, and then it goes blasting off into double zone, but it's certainly worth holding gold because it will go much higher. Amen. All righty, let's continue. What about Bitcoin? How about the Bitcoin? This could be setting up, or we need this, but so far we've been holding. We got a nice three-wave correction. I was thinking it would come down to the Magic Fibo. We got to the zone we wanted, we were looking for. And similar way of looking at that, you don't have to use Fibonacci's, you can use arrows. But this arrow initial move down was in very similar proportions to the second wave down. And that put us into a zone we wanted to get to, which we reached. We didn't go to the extension portion of this. I really wanted to see it touch the Magic Fibo, but it did. Now we're stuck in the resistance zone, but it's more bullish than bearish. So all I can say is if Bitcoin does get turned down and we come way down here, that's salivate country. But all we got to do is break out of this last little zone we're in, and it sets up my 125 up here, bigger move, up to my 125, 130 area, my zone up here. So we break this resistance zone, we're going where? 125, 130. And how do we look at that? We can do this same type of move. Let's start removing some of these so I can let you focus on what's most important at the moment. So remove all that, stretch this out. And the most recent high to low, you do your 2.2 from the recent high to recent low. And that puts us in that 118 to 130 area, right? Just for that. 14.5 followed by 18.9 followed by 130. Now off this recent, most recent, that's the bigger one, but off the most recent pullback, we have this high to that low. And what are we doing? We start closing above this zone. So we got the 618-786 zone we've been testing. We're testing on the bigger moves, we're looking for the extensions higher. Are we going to get up here? You betcha. Now, at the recent one, we're testing 618-786 zone. But once we break it, what happens? 114, 115, 118, 120. This is why I'm expecting this 120, 130. So high to low, target, high to low, target. That's where it's screaming. So we break this resistance zone that we've tested several times already. We break that, it's over. We're going up here. Big picture, go out to the monthly. This is on the scenario with Bitcoin. Ever since Bitcoin's inception, we go through what they call Bitcoin mining halving, where everybody that mines Bitcoin gets half the value per Bitcoin. And that's what forces price to go way higher. The plan and the strategy has been you buy the low, you wait for halving, you get the big 12 to 18 month run, and then Bitcoin winter into the next halving, you bottom, next halving, you go 12 to 18 month run, then you get a pullback, 12 to 18 month run. And I know you don't see much on this chart because it's not in screen, but let me bring that in. So every 4 years, we have a halving. 12, 16, 20, and most recently 24. What we've learned is that every 4 years you top out, every 4 years you bottom. So if you look at all of these ebb and flows and you stretch these out, when we had the first halving, Bitcoin made a run 12 to 18 months later. It topped out in 2013. Then we got a crypto winter low in basically 14 right there is the low. So we bottomed in 14. We bottomed in 18. Continue this. We bottomed in 2022, most recently, 15,000-ish. So what did I say when we were at this scenario going into this year in 2024's halving? Buying Bitcoin below 20,000 is a crime. It's a steal. It's an unbelievable deal. That being able to buy Bitcoin at 20,000 and lower is unbelievable. And look at where we are. We shot up to what was it? 120, well, not quite 120 yet, 112-ish. So we still got more to go. Where are we headed? Well, again, every 4 years, 17. We topped in 13 over there, then 17, then 21. When are we going to top out again? In late 2025. What are we in? 2025. So I still think there's more upside. Then we bottomed in 13, 14, 18, 22, right there, 2022. So when's the next bottoming? 2026. So I already have my nibble zone. When Bitcoin goes up to 150, 175 or higher, then it pulls back into late 2026. So just like we said back in 2022, perfect time to buy Bitcoin. We're going to hold it until late 2025 when Bitcoin's at 150, 175. And you were able to buy it below 20,000. I screamed and begged and pleaded. No buy, sell, or hold recommendations. I'm not a certified financial planner. I cannot tell you what to do, but the technical picture and everything about Bitcoin since its inception, it does these ebb and flows, tops out, same thing. 13, 17, 21, 25. It bottomed 14, 18, 22, 26. So what do? We buy and hold for like 3+ years. We're going to buy in 26, start the process all over. We're going to sell in late 2029. Next halving is in 2028. Got it? And what have we learned since the halving? Bitcoin goes on a massive run 12 to 18 months post halving. Massive run 12 to 18 months. Massive run doesn't look like much over here, but you zoom in and you stretch that out. That was quite the move back then. So let me just do it for you because it looks kind of ridiculous and think that's not much of a move. I can't even see any price action in there. But look, as you bring it into perspective, back during the first halving, it went from pennies and minimal dollars all the way up to 1,200. From dollars to 1,200, quite the move. And it went from 1,200 back down into a couple of $100 range. Then the next halving starts to rip, and then it does what? From the low of that 190 area, it went all the way up to a high up here of 19,000. Isn't that interesting? Big pullback into the next one. Big rip. It keeps doing it. Rinse and repeat, rinse and repeat. So that's why we're in the midst of this latest one at below 20,000. We're ripping higher into the 150, 175. If you do the math, every crypto winter low, Bitcoin's at least done a 10 to 20x. Go back in history, every low and Bitcoin high went to 10 to 20x. So 10x from 150 from 15,000 is the 150 target. Then you use Fibonacci extension relations from highs to lows, and your 1618 extension, which we've seen every time except a couple even did more than that, that puts us at 175. Got it? So when you do the Bitcoin high to Bitcoin low, and we go to this extension, zoom that out, it's putting us in the 175 target. All right. So any questions on what Bitcoin's going to do? My long-term projected path is to come down to somewhere between 50 and 30,000. That's taking consideration Bitcoin goes to about 150 to 175. Then we should somehow get down in the zone, just like we talked about here. 20,000 and lower was a steal. Well, Bitcoin at 50,000 or lower is going to be a steal in late 2026. We'll see. We'll end up having a new high and a new low based on where it tops out and where the crypto winter low comes. But you could expect it to be sometime in late 2026, just like it was in 2022, and then in 18, and the previous one in 14, et cetera, et cetera. And then after we bottom in late 2026, we're going to give you the same opportunity here that it went from 20,000 to 150 or higher. It's going to go from 50, 30,000 range to several hundred thousand, but we'll be able to give you more insight once we get the high and the low. Amen? But every halving, and the next halving is in 2028. So we want to be very bullish and buy in late 26, maybe early 27 as it's bottoming. And then we sell 12 to 18 months post the next halving, which puts us in 2029. Buy in 26, sell in 29. Just like we bought in 22, we're selling in 25. And before that, we bought in 18, sold in 21. Rinse and repeat, rinse and repeat. Amen? So you buy low, hold it for 3 years, sell high. Buy low, hold it for 3 years, sell high. Buy low, hold it for 3 years, sell high. Buy low in 2026, hold it for 3 years, sell high when we get up into that stratosphere. And again, it will be in the hundreds of thousands by then. But we'll give you accurate targets when we get there. For now, the target is 150 to 175. And in closing on the most recent price action on Bitcoin, once we take this resistance zone out, we're going to 120, 130. And I would not be surprised to see it go ripping up there, another pullback, then the last push into the end of the year, late fall, pushing us in that 150, 175. Ethereum, not so bullish. I still think when Bitcoin makes its final run, we're going to see Ethereum make a move back toward 4,000, but it's definitely not nearly as bullish as Bitcoin. As you can see, we have not broken all-time highs from the last crypto winter high, a crypto high in 2021 to the low in 22. We have not broken out to new highs where Bitcoin clearly has, right? Big difference. We're up at extensions on Bitcoin, where Ethereum hasn't even broken out yet. It barely went to 4,000, which was that 786 retracement. So I think we're going to at least visit the 4,000 range, but I really would like to see this start ripping higher. And that's the plan. I still have my Ethereum. I'm looking for more upside, but until we break 4,000, this 5,800, 6,000, 7,000 range is pretty much off the table till we see otherwise. So that was kind of area we wanted to see it go to. Well, all of this price action says otherwise. So Bitcoin rips to 120, starts moving from 120 to 150, 175. I think this is going to make Ethereum rip at least back to 4,000. If we can take that out, then the door's ajar to go to 53, 58, maybe 7. But it's got a long way to go. And I don't like seeing the high to the low. It's bogging down below that 618 retracement, right? So even off the most recent high to low, it's stopping right at a 618 zone. Not good. Amen? All right. And last but not least is let's circle the wagons. And I'm still very bullish on Solana. Same type of thing with rinse, buy low, sell high. You could have bought Solana in below $10 and it already ripped in the $300 range. That was when you buy. So what is going to be the next time for Solana? I think this is going to go blowing off into the 400 range, maybe 500 range by the time Bitcoin's done. But when Bitcoin has reached its target and we're in late fall or toward the end of the year and the crypto's done, we're looking for another big retracement into late 2026. We'll buy and hold to 2029 in the same type of move. But this was the thing of beauty. Opportunity was stated to buy at these lows, and we would go into the hundreds. We've already done it. This pullback now is just setting up the next leg. I do think Solana will go in the $400 to $500 range before it's done. But wherever it is, when Bitcoin hits its target, we're at that late fall-ish, September, October-ish time frame, and Bitcoin's up in its target zone. I'm going to sell all my Solana and I'm going to look for a big pullback. Wherever that comes down to, then in late 2026, I'll look to buy some more Solana and then look for that thing to go stratospheric in the next cycle. All right, for those of you that do a little crypto. Crypto is a different animal. It's extremely volatile and it's at very high risk. So the money I invest in crypto, I could put into a section that is obviously at risk. It could go to zero. Yes, there's some massive gains that have been made, and there are massive gains, in my humble opinion, to be made again. But it has to be disposable income that you can throw away in case something happens and it goes to zero, and it won't, send you into oblivion. It's just money that I have that if it goes to zero, I can live with it. And otherwise, we're up huge and I'm looking for the next. Rinse and repeat. So I use it every basically 3-year cycle. Buy low, sell high. And I don't think this is the high just yet. I think as we finish this cycle, it will go a bit higher. But the bulk of the move is certainly over, just like Bitcoin's bulk of its move is already over. And I do think we're probably going to get one more push. But again, my motto is when Bitcoin gets to its target zone, we're into late 2025, which we're starting to move toward. That fall to later, September, October is kind of the sweet spot. Wherever Bitcoin is 150, 175, we're in September, October. I'm bailing on Solana and I'm going to look to then buy low again sometime in late 2026, maybe early 27. And wherever that is, we'll set up the next big push into 2029. Amen? There you have it. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. And before we go, some of the stocks I'm very big on. I prefer Elon to chill out and not try to be political and just go back to work. But I'm very bullish on Tesla with the cyber cabs and the robo taxis and the robots and all the thing that Tesla has coming. I still think Tesla is going to make a big push into the end of the year, and we're looking at $500-$600 zone. And we talked about that a long time ago with TSLL back in October when we were trading below $10. Right here, we said go long, and then we would go up to $40+. And sure enough, we did that big run. And what was that? That was Bitcoin, a Bitcoin. That's back in October, that same week. Can't make this stuff up. October. Right there, October the 24th. Expect Tesla to hit 500, consider TSLL trade. So if you would have been part of this scenario and participated, you would see that TSLL went where? It went from under $10, quadruple above 40 bucks. And then most recently, when we're down at $6, I said below 15 and all, I'm looking for opportunities to start adding for the next big run. And I think Tesla's going to make its run toward 600, and TSLL should make a run toward probably 50, 60 range. Kind of the plan. And so far off the recent low to high, we're kind of holding the support zone. So when Tesla goes ripping, TSLL, 2x shares, is going to go ripping. So I'm long TSLL. Can't tell you what to do, but I own TSLL shares. And when it dipped below here, it was like buy below 15. And we even set it along the way as we go up to the next opportunity. TSLL setting up again. And then we said when TSL reached our buy zone below 15, and then I went on to say, hey, the lower it goes, the more I'm adding. And the same thing with Coinbase and CONL trade. And both of those have done very well and will continue to do well. Look at CONL. We talked about it. We got a dip down about 20 bucks, went up over 50 plus dollars, 60 bucks. Not too shabby. And we're expecting more upside as its parent, Coinbase. Remember, there was a time when I said Coinbase at 100 bucks is a steal of a deal, and went there up to 350. We got the big pullback again, above 100 this time, about 143. And we talked about the same cycle and scenario, trigger higher, and it went up to 380. I don't think it's finished. I think Coinbase is headed toward 4, 5 range. I'm still looking for the 5, maybe as high as 6 plus. And when do I sell my Coinbase? When Bitcoin reaches its high, 150, 175, and we get the crypto winter low. I'm looking for that pullback. And then we'll go into 2028, late 26, look to buy and invest again and hold it till 2029. And yes, they're becoming a Bitcoin bank. And when all those ETFs came out on Bitcoin, iBit and a whole bunch of those, they're the trust for a lot of those holding all that Bitcoin. So I told you that alone would force price to go much higher. And sure enough, like clockwork. But look at CONL, not too shabby, from 20 bucks up to 55 so far, almost a triple. Not too shabby. And again, I think there's more upside to come. So what are we looking at? If Coinbase can reach its target we're talking about, this TSLL can go higher with Tesla, as CONL leverage product will go higher with Coinbase. And we're looking for that to go into about $80, $90 range. So there's still more meat on this bone. And when do I sell? When Bitcoin gets to its target, I'm unloading all of that. Amen. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.